Last night, NVIDIA didn't just beat expectations, it blew the doors off. $57 billion, more than $2 billion above what even the most optimistic analysts were modeling. EPS, a clean $1.30, another solid beat. After hours, the stock popped 5%, pushing NVIDIA right back towards that $5 trillion territory. But here's the question everyone's asking this morning, from retail traders right the way through to hedge fund PMs. Are we still early in the biggest AI cycle of our lifetime, or is this the point where the mania tops out? Let's break down exactly what happened and what it means for your money. Now, welcome back to the channel that cuts through the noise when the headlines won't. I'm Grant, the guy who torched 650K in 2022, chasing hype and ignoring data. Now, my goal here is to tell you what exactly is going on and to help you avoid the mistakes that I made. Not financial advice. Always do your own research and make decisions that fit your goals. Now, today is November 20th, and NVIDIA's fiscal Q3 2026 earnings were so wild that I even stayed up the entire night tearing through the 10Q, the earnings call, and hedge funds chatter on X. So stick around, because by the end, I'll share the exact price levels I'll be watching heading into December. Let's start with the numbers, the ones that made even veteran Wall Street analysts sit up straight. NVIDIA posted $57 billion in revenue. That's up 22% quarter on quarter and 62% year on year, beating estimates by more than $2 billion. Non-GAAP EPS came in at $1.30, topping the $1.26 consensus. But the real jaw dropper, data center, $51 billion, nearly 90% of total revenue, fueled entirely by the global AI infrastructure build-out. To put that into perspective, not Apple during the iPhone boom and not even Microsoft during the Windows era, no mega cap in history has ever generated this level of revenue concentration from a single product line. This is a generational phenomenon. And here's the kicker. Most of that $51 billion still came from Hopper, not Blackwell. Blackwell hasn't even fully hit the market, and the line is already booked out for the next 12 months. Then guidance dropped, and the whole room basically exhaled at once. NVIDIA expects $65 billion in revenue next quarter, putting the company on a clear path towards $200 billion plus annual run rate. Now, Jensen Huang summed it up with one line that went instantly viral. AI is going everywhere, doing everything all at once. Now, the market reaction was fast and aggressive, and now we're trading in the $192 to $194 range. Even with all the chop this year, NVIDIA is still up around 40% year to date. But the biggest story is what this means for the broader market. So far in 2025, the S&P 500 is up around 15%, and NVIDIA alone has contributed 37% of that move. One company carrying a third of the index's gains. That's unheard of, and it doesn't stop with tech stocks. A strong NVIDIA quarter reshapes expectations around productivity, inflation, and even the Fed's long-term policy path. AI-driven efficiency changes how economists model inflation. It moves the neutral rate. It shifts the macro conversation. That's why one earnings can move the entire market narrative. Now, semiconductor ETFs like SMH jumped 2 to 3% pre-market, and anything with AI exposure, AMD, Broadcom, TSM, flashed green instantly. And don't forget, earlier this year, NVIDIA briefly became the first company to hit a $5 trillion valuation. Last night, it pushed it right back towards that level. Now the bull case, and yeah, it is strong. Blackwell hasn't even started its full ramp yet. This quarter's $51 billion, mostly Hopper. Blackwell delivers a massive performance jump, and it's already sold out. Now, hyperscalers, Microsoft, Amazon, Google, Meta are guiding for more than $300 billion in CapEx next year. Most of that is going straight into AI infrastructure. In other words, yeah, NVIDIA keeps getting paid. Now, analysts are calling this a once-in-a-generational tech shift. Price targets, $250 to $300 within 12 to 24 months. And the craziest part, we're still early. This feels like the smartphone boom of 2010 or the cloud boom of 2015. The foundation is being built right now, but the bear case is real. Valuation, rich. NVIDIA trades at a forward PE north of 45 to 50. Massive for a company of this size. China, that's still 20 to 25% of revenue. A minor tweak in export controls could hit earnings immediately. Supply chain, that's extremely concentrated. TSMC's advanced COWOS packaging is in the bottleneck. Any distribution, geopolitical or manufacturing slows shipments faster. Hyperscaler CapEx, well, it's not going to grow at this pace forever, guys. Eventually, they shift from expansion to efficiency, and big money, well, they're quietly trimming. Founders Fund and several macro funds have reduced their NVIDIA exposure for 2 straight quarters. Now, guys, the growth is real, but the margin for error is narrowing. If you're sitting in cash, dollar cost averaging under $180 makes sense. If December brings volatility, especially tax loss selling, the $165 to $170 zone becomes interesting. If you already hold and you're up big, trimming high cost lots and riding the rest with a trailing stop is perfectly reasonable. Now, this isn't about hero trades, it's about discipline. If you want exposure without holding NVIDIA directly, Triple Q gives diversified mega cap exposure. SMH gives a cleaner semi play. Now, if you're aggressive, pre-Triple Q or leverage single stock ETFs, just know that they move fast and sometimes violently. Bottom line, guys, NVIDIA is still the clearest AI growth story on the planet. But at this valuation, smart positioning matters more than ever. That's the full breakdown today, guys, of NVIDIA's monster quarter and what it means for your portfolio. Remember, trade smart, stay green. I'm Alpha Grant, and remember, this video is not financial advice. Please always do your own research and make choices that fit your goals. If this helped you cut through the hype, hit like. It really helps us push this to more investors. Subscribe and ring that bell so you never miss these earnings breakdowns. I'll see you in the next one, guys. Thanks for watching.